Fine, Mr. D.
Yeah, but you are in.
Hi, I'm Curtis.
Hi, I'm Dan Piff.
And welcome back to the channel. So, if you made it this far, we have come to the end of the SMC series. So, first of all, if you made it to all videos, give yourself a round of applause because you're basically willing to learn how to trade and basically follow our journey alongside your own. So, yeah, today we're just going to go over money management, which is the last chapter in the series. We went over trade management and the daily process in the last video. So, watch that and basically let's finish the chapter of today with the last one.
Thank you for the support.
Yeah, do the liking, subscribing, and let's get into it.
Yeah.
So chapter 10 is money management. So understanding the risk to reward. So like I think we've across the whole series we've mentioned basically managing your trades, like obviously
always
not
been talking about the risk to reward ratio always.
Yeah, so like we have already talked about this chapter in past videos. Basically when you trade, you wanna risk what you are comfortable of losing, basically. So this is just money management, basically. So the risk to reward is something that can really change your trading for the end of your life. Or end of your life? End of your life. In fact, as a trader, it's important to think in terms of probabilities when you are trading. Okay.
Yes. If you only take 1 to 3 risk to reward trade, it means that you have to win 33% of your trade in order to not lose your money.
Yes.
Now, we usually take a 1 to 2, which is a 50%, risk to reward ratio.
For the past, I think we've been on the journey for 5 months, and most of our trades has been 1 to 2s, and occasionally a 1 to 3.
Yeah.
Me personally, a 1
And
to 3.
if you are watching my videos, which I hope you are, I usually use a 1 to 3 in that video.
To 5 return to reward ratio, you'll need to have a win rate of 20%. That means that you can be wrong 80% of the time. Only if you're looking for 1 to 5 basically trades. As you can see now, if you're looking for even higher risk to reward, you can literally scale up an account very fast. So basically what I say, if you're looking for, you can scale up your account very fast basically. So this is just a semantic of like possible risk to reward trades. So yeah, it shows a 1 to 3 basically you need a win rate of 33%, a 1 to 5 you need a win rate of 20%, a 1 to 10 you need a win rate of less than 12%, and a 1 to 15 is basically lower than, I would say, I don't think you need, like it's not showing any percentage rate.
I think the highest I've went is like the 1 to 5.
1 to 5, yeah.
Risk to reward. I don't think I've like crossed that threshold. I didn't go like further than
Yeah, I think for the past like 2-3 months I've only done 1 to 2s and 1 to 3s. Like at pace of this. So what do you need to be a profitable trader? So I would think this is very cool. As you can see, we just saw what we just saw. If you 1 to 2, you need a 50% higher than 50% win rate basically. If you're only looking at 1 to 3 trades risk to reward, you need a 33% win rate basically. 1 to 5, 20%, 1 to 10, 10%. And obviously I think most of us will have a combination of these, like we just mentioned. Me and Leon have like mostly these two, probably this ones here at the beginning, the first 3.
the first 3.
I haven't done a 1 to 10 and a 1 to 15 yet.
This table shows how much win rate could be powerful on the market. This is literally a game changer that can replace your way to trade forever, as it did for the author.
We still on this journey, guys.
Personally, I use between 5 and 20 risk to reward with about 40% win rate. This allows me to make very profitable month. Makes a very profitable month for him. Even if I'm more wrong than right.
Okay. In trading, you don't need to be right all the time. You need to follow the probabilities. For some people, it's hard to handle a win rate of less than 50% because they think they're stupid and they made bad emotions basically. At the end of this, it induces a lot of bad decisions that separate you from the edge, and this is what differentiates a profitable trader from a non-profitable trader basically. Okay.
Some traders have always different risk to reward as the author, but you can also use money management with strict take profits and not taking care of the risk. If you do that, and he advises us to use between 5 and 10 risk to reward maximum. 5 risk to reward with the SMC is easily achievable with the daily process he gives us.
Okay.
A strict 5 risk to reward take profit on the long term can be very lethal. He personally uses a strict take profit when he trades prop firms.
Yeah.
Yes. Prop firms also. After the series, we hope to jump into prop firm challenges. Obviously, we did check out the the different brokers to use for these challenges and whatnot, which is the best challenge for us to use in our let's say what we can afford.
Yeah.
So we also excited about jumping into that, and hopefully you guys will follow that journey as well.
Yeah. So you won't always win money every day, firstly, every week, and every month. It's very important to understand and save it in your minds when you actually think taking losses and have bad moments, basically. So firstly, if you have like like for a week you only had losses, that doesn't mean you will always like. It's just basically it's a psychological thing, basically.
And there will be not just a week, maybe a week and a half, maybe 2 weeks of losses, straight losses.
And this is where your psyche will definitely come into place. Yeah.
If that happens, I advise you like just take a break for like a week. Just take a break away from the charts, take a break away from trading. Just
a great advice, guys. A great advice.
You know, just chill out and relax.
So what we just spoke about, just a chart form of when equity chart looks like if you're a profitable trader. So basically this is just as you're a profitable trader, this is how it will go. So this is when you start off. So basically if you're looking at years, this is for your first, they say most average profitable traders is not profitable in the first year to 2. So yeah, just take that into consideration also. So this is where you'll learn the most. Obviously you learn from losses. And like our soccer players lose from losing a game, or any type of, you lose from a fight basically. So it's basically the same thing with trading. So you can see for the first year, you'll gain, you'll lose, you'll have a big gain, and you'll lose everything. This is where probably your psyche comes in, because you've literally think like you've lost a lot. And then after you've mastered that, like psychology and having your strategy, this is where you become a profitable trader basically, guys.
You can have bad moments, but if you follow your plan and your rules to the end, it will be worth it. This chart can also be compared to a psychologically of a trader during the day. Yes, following your rules is very important. Setting up your own rules is very important for yourself. You know, like you're saying, as an example, maybe as an example, me, I don't trade on Mondays. Because like that's when the market opens on a Monday. I keep watch on a Monday always, and then around 4 or 5 o'clock, I would check on the London session, and then I would like just keep track of that, do my analysis on that, see where I can come in with a trade, and if maybe still on that Monday I can come in on a trade, then I would. But I don't usually trade on Mondays. I just keep track. The rest of the week I would do the trades, and then I would give myself maybe 3 or 4 trades to do just for that week, and that's that.
Yeah. So what Diane said is basically it's developing your own plan basically. We're all not the same. Like at the beginning, I think that the author said that we're not all the same. Like you, for example, can look at the chart for about an hour. We can look for the chart, for example, 30 minutes. So depending on your strategy, and this will be adjusted over time. Obviously, you learn the basics, obviously, and then you develop your own plan from the basics. So yeah,
trial and error.
Trial and error, guys. So I think that basically covers it. This last chapter is basically just more about trading. We're not going to go into depth. We're going to just maybe just run over it quickly. So basically your time frames, we talked about active sessions, risk management, entry criteria, your basically step-by-step process for entering a trade. So all of this has been covered throughout the chapter. So if you missed anything, go back to the start and basically watch the series from the start basically.
Yeah.
So this was just more stuff like we mentioned, your time frames. This is basically your 1 minute, which has been covered, your change of character, or the order flow point of interest. So not a lot of stuff regarding this. Your trading journal, basically, as you're on this journey, keep a journal of all your losses and why you're entering a trade. Write points down. So having your own trading journal.
That's actually very important, really important. Every trade you've placed, write it down in your journal. Keep it in your journal. Trade your wins, your losses. At the end of the week, check it over. Yeah. And then just keep doing that.
Keep doing, and that's where you. That's what basically we'll learn the most from doing this. Having your own trading journal. And yeah, this is more pairs. You can see there's just more information which we're not going to go into. It's not really anything. And this is just vocabulary. So BOS, I think everybody should know.
Break of structures.
Yeah, all your equilibrium, change of character, which I think we've used out of everything so far. Now, what do you think we use the most? Change of character. No. We've used liquidity the most. Like
we've used change of character the most, and BOI.
Order block.
Yeah,
order block. I think liquidity we've mentioned a few times.
Yeah, we've said it a few times. Yeah. It was even now in the last chapter.
So yes, that's the book, guys. So yeah, I think from this point on, there's nothing really much we can say after the series. You can basically just follow our journey from here on in the next videos. But learning wise, you can always take a few things from upcoming future videos. Which will basically learn a lot on our channel. Basically, you'll learn a lot maybe not personally, but basically us growing, you'll basically watch our journey. So I think for like educational based on SMC, the book basically covers everything, and I hope you've learned like a few stuff and you're ready to basically trade with us and be on a journey with us.
And I hope you've enjoyed our company.
Yeah, yeah, definitely guys. So I would say from this point on, if you're about to sign up to a broker, use HFM, as that will support the channel. And obviously, maybe if you're not gonna, maybe comment on videos in the future if your losses or gains or your experience basically. So I think from this point on, we have done our part. Until next time guys, or in the next video, not SMC, it's gonna be something different. We will spot you. Until then guys.
Peace out.